In the U.S. natural gas futures market, there are signs of a recovery, with a minor increase to $3.15, despite a 5-day losing streak. The market's recent trading activity suggests the potential for increased volatility and a shift in sentiment from bearish to bullish. Some market participants are speculating that escalating tensions in the Middle East may lead to short covering, giving the market a slight boost. However, it's important to note that Israel's natural gas production is not a significant factor in this context. Meanwhile, a breakthrough in wage negotiations between Chevron and Australian LNG unions has alleviated concerns about disrupted supplies. Planned strikes at Chevron's Gorgon and Wheatstone projects have been called off, eliminating the risks that had previously driven up European spot prices. While cooler weather patterns are expected to have a marginal impact on demand, temperatures in the northeast are forecasted to drop this weekend and again between October 29 to 31, resulting in a slight uptick in demand. Nevertheless, most of the U.S. is expected to experience comfortable weather conditions throughout the remainder of the month, signaling relatively low demand. On the supply front, the United States is achieving record-high natural gas production, averaging 103.5 billion cubic feet per day in October. While pipeline exports to Mexico have slightly decreased, LNG exports are expected to rise with the reopening of the Cove Point export plant. The robust U.S. gas supply dynamics indicate that it is well positioned to meet global demands, particularly as colder weather approaches. Considering the surging U.S. nat gas output and the resumption of Australian LNG supplies, coupled with modest seasonal demand, the short-term outlook for U.S. natural gas leans towards a bearish stance. While geopolitical events and potential labor strikes may introduce some volatility, the strong supply fundamentals currently favor a downward price movement in the near future. From a technical indicator perspective, it appears that the $3 level below is likely to provide support. Although there is a resistance level at $3.40, the asset must surpass this point to validate the potential for further upward movement. In conclusion, robust technical indicators, combined with a price level above the 50-day moving average, as well as main and minor support levels, indicate a predominantly bullish market sentiment for nat gas. Nonetheless, traders are currently searching for a level of substantial strength that can underpin a rally towards new short-term highs. I do think that eventually, we could get to the $5 level through the winter. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.